You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome to the show, John.
Hey, Jim. Good to talk to you again.
An interesting headline on your website, OPEC going broke, dumping dollars, and is it a good or bad thing?
Yeah, basically the oil exporting countries, mainly in the Middle East, have, of course, made a ton of money over the years by selling oil to the rest of the world, and they've invested a lot of the excess money in treasury bills and treasury bonds. In other words, they bought a lot of U.S. paper, also a lot of euro-denominated bonds and other paper, but mostly they've invested that money in dollars. And unfortunately for them, they've never really, as a group, diversified their economies away from energy. You know, they don't have thriving entrepreneurial sectors or tech sectors or really anything besides selling oil to the rest of the world and then spending or banking the resulting revenues. Well, oil is down by 50% in the last year, and most of the Middle Eastern governments have budgets that are based on much higher oil, therefore they've got this huge shortfall. So it would be like the U.S. or Canada suddenly finding out that tax revenues are down by a third or a half. You know, we would have a serious problem financing our government if tax revenue dried up. And that's what's happening to OPEC right now. And luckily for them, they've got a huge store of financial assets that they built up over the years, but now they have to sell them. And so they're dumping a lot of dollar-denominated debt. In other words, they're selling bonds in return for cash. And what that does is tighten the global money supply. You know, when a central bank wants to tighten the local money supply and raise interest rates in its country, it sells bonds. And in return for that, it gets cash. So that sucks cash out of the economy and presumably slows the economy down, raises interest rates, et cetera, et cetera. Well, that's happening globally now with OPEC. They're going to apparently sell a couple of $100 billion worth of bonds in the coming year. And that's the same thing as saying they're going to take a couple of $100 billion out of the global money supply. And the question is that good or bad? You know, because it's good to see some of these countries that aren't necessarily our friends all the time losing the ability to project power around the world and cause trouble. And on the other hand, they're tightening the global money supply by having to sell their bonds in return for cash. And is that enough to offset what the global central banks are doing? You know, because all the global central banks right now, with the exception of the U.S., but soon the U.S. is going to join that party, are very, very loose right now. They're pumping lots of new money into the local financial system, and it's finding its way into the global financial system. And so interest rates are plunging, and it's if you're a good credit, very easy to borrow money for next to nothing out there. And their plan, the central bank's plan, is to give us so much free money that we finally break down and start borrowing again and buying stuff, and the global economy grows organically from there. You know, we reach escape velocity, and we don't need the central bank's easy money anymore. Well, that's not really working. And so the central banks are going to have to step it up if they want to play out this experiment. And if you've got OPEC leaning against that tide, that makes it a little harder, you know. Probably not overwhelmingly hard, but it is a factor. And it's just generally amusing to watch. You know, these guys have run surpluses for such a long time and built up such huge amounts of money, and everyone was wondering what they were going to do with it eventually. So now we know. They're using it as a rainy day fund and continuing to finance their inflated governments by selling assets.
How much of an impact is the Saudi war in Yemen having?
Well, it's probably expensive for them, you know, depending on what they're doing, and stressful. So it's probably at the margin adding to the amount of bonds that they got to sell to get new cash in, because war is incredibly expensive. You know, you buy all this gear and then you send it out to be blown up, and then you have to buy more. So war is, in many ways, an incredibly pointless financial activity, and the Saudis are finding out that now. The U.S. has known it for years, or people in the U.S. have known it for years. When you look at our military budget and what we get for it, it's insane how much money we've borrowed from China in order to run a global military empire, and we will pay the price for that too eventually, because our debt continues to grow at a really dramatic pace. We're adding trillions of dollars in new debt every year, without really much to show for it in the U.S. The economy is limping along. Some statistics show slight growth, other statistics show slight contraction. So I think if you net them all out, we're pretty much flatlining right now. We're really not growing. Manufacturing sector in the U.S. especially is extremely weak. Housing bounces around, but the trend line isn't very favorable. And same thing with employment right now. We're hiring lots of people, but they're for such crappy jobs that it should hardly count. And then in the oil sector, where there were good jobs, layoffs just hit 100,000 here in the U.S., and they're showing no signs of letting up. So we're going to lose good jobs while we add lots of nice McDonald's and bartending jobs and stuff like that. And so just generally, the easy money of the last few years really hasn't produced an economy that's firing on all cylinders. Meanwhile, we're taking on huge amounts of new debt every year. So basically, for the extra $10 or so trillion that we borrowed in the last 5 years, you could say that we have nothing whatsoever to show for it, because we basically have the same number of full-time jobs in the U.S. economy as we did in 2007. So 8 years, same number of jobs, $10 extra trillion of debt. This was not a good bargain, and it wasn't progress by any stretch of the imagination.
It would have been cheaper to subsidize all those people on minimum wage.
Yeah, it would have been cheaper to pay off all our home mortgages. So we were all debt-free. We literally could have done that for the cost of the bank bailouts and the two Iraq wars.
We'll have more with John Rubino right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with John Rubino, author of several books on the economy, including The Money Bubble. You mentioned China's economic numbers are not as good as they expected. What's going to be the impact of that?
Well, China, the world's second largest economy, borrowed more money than anybody else after the 2008-2009 near-death experience in the global financial markets. They borrowed like $15 trillion, and they put that to work randomly. It looks like they bought huge amounts of raw materials, and they turned those raw materials into new cities and airports and roads and lots of other pieces of infrastructure, much of which didn't turn out to be very necessary. They've got ghost cities now, places that are literally cities where nobody lives, and airports where the traffic might be 3 or 4 planes a day, and that's it. They've got a lot of stuff like that that's not generating anything like the cash flow necessary to pay off the related debt. And they've also got a shadow banking system that's very opaque. We don't know what that's doing, what that shadow banking system is borrowing, what it's spending money on, and except that we can say it's probably malinvestment, a lot of it, probably stuff that they shouldn't be buying. And so China is on the verge of kind of a credit crisis, and their economy is putting up numbers that, if you dig under the surface, they're generating just completely acceptable headline numbers, but down below, where the real stuff is happening, it looks pretty bad. Manufacturing is weak, and their exports plunged in the last quarter. It was down something like 14%, if I've got that right, either 12% or 14%, which is a huge drop-off for an export-oriented economy. And luckily, their imports also plunged, so their trade surplus stayed intact. But that's a picture of a contracting economy. And China can't afford to contract. They owe huge amounts of money. They've got an awful lot of people who need jobs and who wouldn't respond well to being thrown out of work. China has a cultural memory and a cultural terror, therefore, of civil unrest. because they've seen it in living memory, where 1 million people take to the streets and the government gets torn down. And so they can't afford, either in their own minds or probably in reality, to go through an actual recession where the economy actually contracts. Yet that's what normally follows a credit binge. There aren't very many instances in human history when countries borrowed an awful lot of money, spent it very unwisely, and then continued to grow at a steady pace after that. Usually you have to have some kind of a serious recession to flush out the bad investments. In other words, to allow them to change hands at lower prices at which they might be profitable. So somebody who owns something today has to go bankrupt and lose it. That thing has to be sold to somebody via bankruptcy court or some other version of a short sale, where the new owner gets it at such a great price that they can run it profitably, and then the economy goes forward from there. That has to happen on a vast scale when a country borrows too much money. And so China's kind of looking at that kind of scenario, but they can't accept it. So we'll see what they do. I suspect they've got to devalue their currency really aggressively in the not too distant future, because right now they've pegged the yuan more or less to the U.S. dollar, which means its value has gone up along with the dollar's value, which means Chinese exports have gotten suddenly much more expensive on global markets because they have to price them in yuan before they sell them to the rest of the world. So the response to that normally, when you've got a strong currency and your economy is slowing down, is to devalue your currency. So we can expect China to break the link between their currency and the dollar sometime in the next year, I would think, and aggressively devalue the yuan, and in that way try to generate more growth. Now that of course is a zero-sum game. It comes at the expense of China's trading partners. So if they do that, that hurts us, because then their stuff gets cheaper. We import more Chinese stuff, which means we have to pay China more dollars, and we've already paid them an awful lot of dollars in the last couple of decades. So they have this huge trade surplus with us and really massive foreign exchange reserves, mostly denominated in dollars. And so it's not in our interest in the long run to continue to borrow money from China in this way, which is basically what that is. We're giving them pieces of paper, which are IOUs. They're giving us real stuff. So at some point in the future, we have to make good on those IOUs. And that won't be a pleasant process when it happens. So this is, to sum up, a horrendous mess in the global financial system where everybody's borrowing too much money. Almost everybody is doing weird stuff to try to keep their debts from imploding on them and just making the problem worse. So whether it's China or Europe or Japan or the U.S. or to an extent Canada, as you were telling me before the show started, we're all making mistakes. And those mistakes will come back to bite us in the not-too-distant future. So the question really is, what will be the nature of the crises when they hit? And they can come in a lot of different forms, because debt can lead to all kinds of problems depending on how you respond to the debt. If you try to maintain the value of the currency after you've taken on too much debt, then that debt will just collapse because it can't be paid back with a strong currency, and then you have a 1930s-style depression. If you try to inflate away your currency to make your debts easier to manage, then you get the potential for runaway inflation or asset bubbles, which is what we're seeing now. See, we're seeing runaway inflation, but only in certain sectors. Equities are at all-time highs. Bonds are at all-time highs. London penthouses and fine art and generally the stuff that people with capital buy when they have more capital than they know what to do with. So they buy overpriced stocks, and they buy Van Goghs for $100 million, and they pay any price they have to pay to get an apartment at 1 Fifth Avenue. That's what happens when people have too much money at the top of the economic ladder. And so that's what we're seeing today. And that is inflation. That's the dollar becoming less valuable versus art and stocks and bonds and high-end real estate. And so the question is, does that spread to the rest of the economy so we have generalized price increases, which is to say generalized declines in currency values, or do those big asset bubbles pop and then take us back into a 2008, 2009 mini depression? And, that's still to be seen. but something nasty has to come from this, and I'm thinking it has to come pretty soon. These imbalances are so huge that it's very hard to believe that we get through this without some kind of a crisis in the not-too-distant future.
Is that why some countries like to start wars, get the population's minds off their economic problems and get them all patriotic and willing to make sacrifices?
It is indeed. You've noticed that there are more than the usual number of conflicts out there lately, huh, Jim? That's what governments do a lot of the time. When they're messing up at home, one tried and true, time-tested strategy is to pick a fight with somebody overseas and then get everybody at home organized and on the same page when it comes to this external enemy. And then you have to back your leader when you're faced with an existential threat from abroad, right? And so you build consensus in that way and tamp down on the kind of dissent that might have bubbled up if you're mismanaging the economy and everybody knows it. So we're seeing that all around the world. The Middle East is in flames, and China and Japan are still going at it over these islands over there, and Russia, of course, is fighting in various ways with Europe and the U.S., and a lot of this can be traced back to the fact that we're really economically insecure. And we're looking for ways to distract our populations from the fact that we've grossly mismanaged the economy and screwed up their lives, If you're a saver in the U.S., you have good reason to be really mad, or really anywhere in the world, because if you're trying to live on a fixed income, suddenly a fixed income is non-existent anymore. You are actually losing money on your bank account because the interest rate is negative in a lot of parts of the world. And your bond funds used to yield 5, 6, 7%. Now you're lucky to get 1 or 2% from a bond fund. And if you can't live on that, and you make the correct connection between your problems and government policy, you've got a right to be mad at the government. And so the governments, of course, know this. So it's no surprise that they're looking for enemies overseas to distract us from the fact that they're messing up our lives. So financial crises frequently bring with them political and military crises. And so this is playing out really according to the script right now. And that's terrifying because the script calls for some kind of major war. If you look back through history at major financial crises, they tended to be followed by something a lot more serious than what's going on in the Middle East right now, for instance. So I would be very worried if I was a draft-age male in the Western world right now. And, I got 2 draft-age sons, and I'm terrified for them because so much of what's going on now could spin out of control very easily. And then you end up with a draft and kids fighting in some crazy place where it really doesn't matter. And they don't know how they got into this. They just know they got called up and they have to go do it. And, it's Vietnam all over again, only with weapons that are orders of magnitude more powerful. That's the other thing. I mean, we're in the next big crisis, next big political issue that turns into a shooting war. We're going to be using weapons that have never been tested and that have potentially horrendous power. Cyber war can shut down entire power grids and blow up water treatment plants and shut down banking systems, theoretically. And presumably everybody now has the capability to do something like that. So once we really get going, that's going to be something that's completely new. And then we've apparently, at least in the U.S. military, we've got all kinds of futuristic weapons that we've tested, we've taken out of the lab, and we've got them in the field, but we just haven't used them in combat yet. And you can bet the generals are itching to try them out. So this is going to be a really new, especially scary kind of conflict if it happens. We just have to hope it doesn't happen. That we can somehow get through this with just a financial crisis and not any kind of a war. And that unfortunately is the best we can hope for right now.
John, thanks a lot for chatting with us.
Sure, Jim. My pleasure.
My guest has been John Rubino, his website, dollarcollapse.com. You're listening to HowStreet.com radio. This is a copyright performance. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.